Hey, what's up, everyone? Welcome back to Real Wealth, your investing channel to help you make more money, help you keep more money, and then take that money to enjoy more life. Mikey, what's up? We're in person.
We're now side by side here in Mexico. Normally we're doing it from a distance, so you're going to get a real wealth video with us both here in person, and we've had a lot of time to talk in person, a bunch of different experiences here recently, and we're going to give you a really nice update here.
Yeah, it's been a wild week so far. So you hosted your investing course. I got a heck of a lot more good information from you, a lot of new things I didn't know, and a lot of reinforcing of things that I knew but don't practice often. So yeah, it's been a bit since we've been on here together. Mikey's been traveling around. I've been traveling around. Markets have been going up, down, all over the place. So we're gonna get into that. So we're going to go through the market overview, rates, inflation, money printing, the impact that has on stocks and cryptos. There's a CPI report,
Yeah.
US CPI report coming out next week. We'll see what's going on with that. The Bitcoin halving happened. So we'll talk about what resulted from that. So yeah, let's get into a market overview and what you're seeing in the markets.
Yeah, so we haven't done a video in a few weeks. We've been busy traveling and doing other things. We want to make sure we give a nice full update here for everyone. Things have changed quite a bit in the past month or so. And you have to adapt with the times. When I was doing my training course recently, I was telling people you gotta be like a good football coach. Sometimes you call a play out, you send your players on the field, and at the last minute, you got changed because something else changed. And if you stay stagnant, that's not always a good way to do it. So let's go ahead and share the screen. And we just want to be able to kind of make you understand where we were a month or two ago and where we are now. So, we were looking at things a month or two ago, and we were looking at high unemployment, right? Canada has over 6% unemployment. Germany, almost 6% unemployment as well. They were at about 5.9%. So America doesn't have high unemployment, right? But Canada is not doing great. Europe's not doing great. Places like Australia, their housing market's not doing great. China's not doing great. And you have all this stuff going on, even though the Fed kind of, America's not doing so bad on paper. This is from April, right? This is a little bit over a month ago. And they said we're going to get 3 rate cuts this year. So in April and March, we were all cheering on that this bull market will continue, right? Because they're going to cut rates later this year and they announced it, we're going to price it in right now. And the market will just keep going up even before they cut the rates. That's why we've been rallying, right? Inflation is down and they're going to cut rates. People price that in to the markets in advance. Wealthy people get in early when something is coming. So that was from April. April 2nd, they were talking about this.
And things went up a ton. The stock market all-time highs, crypto pumped big time. So yeah, let's see what's happened since
Yeah,
then.
so I mean, if you're looking around April 1st, Bitcoin was in the 70s. Okay. If you're looking on the stock market, this is the S&P. If you go back to around April 1st, look, the market was at a peak right here. This is right around April 1st, right there. Okay. So when we were looking at that article over here, that's basically April 1st is what I'm seeing on the chart here. That was the peak because people were saying, why would we drop? They're gonna cut rates 3 times this year and we're gonna price that in. Well, then look what happened with the market, right? The stock market came down a bunch there. And you'll remember that when we did, I believe it was our last Real Wealth video, I pointed out this red candle here, okay? And I was predicting that the market would drop. If you go watch our last video, you'll remember I was showing this dotted line and I was showing that red candle pierce our bull trend for the first time in a long time. And I predicted a pullback. I didn't know how deep it would be, but you could look on your screen and see that my warning ended up working out well. Now, it's not because I'm a magician and like I'm making this stuff up. What happened was we went from we're going to get 3 rate cuts this year on April 1st. So then recently, the Fed saying we're holding rates, but inflation's getting worse. And I don't know, maybe we're only going to cut once or twice this year. We're not even thinking about cutting rates now. And in April, they were saying basically we're going to cut. So now they're saying, I don't know when we're going to cut. I don't know when we're going to cut.
And I've actually heard a couple of people say that there's the potential for them to raise. So it probably won't happen, but people are saying that there's the possibility of it.
So then you'll see here again, right? Lack of further progression on inflation. So, they wanted to lower rates 3 times this year, but inflation is going up. And so now maybe we can't. I mean, right now, if inflation is already going up for the past, I think it's the past three reports in a row, they're saying inflation is going higher. Inflation is going higher. Not 9%, but, if we were around 3%, now we're around 4% inflation. So if inflation is going up with the rates high, what's going to happen if you bring down the rates? It'll get even worse, right? So they're not going to lower rates right now because the rising inflation would rise even sharper. So they're holding back right now. And that's why the market's dipping, because people are saying, when the heck are they actually going to lower those rates? So this is the problem right now. That's the man in charge. And they're not going to lower rates or announce lowering rates anytime soon, I think. It could be another 1 or 2 or 3 months kind of a thing before they actually see inflation coming down and allow themselves to say we're going to lower rates. They're being very careful. And if you look at the federal funds rate, this is the historical interest rate chart for the USA. This is something that we talk about all the time here. So you see here, this is the 1960s over here. And you'll remember we talked about stagflation. This is when we ended up having 10, 15% inflation in 1969. They raised the rates over here big time. You can see it on your chart. And what ended up happening was eventually the economy couldn't tolerate it anymore. They waited too long to lower the damn rates. And you'll see these gray vertical bars here. Those are showing recessions. And we had a recession in 1970. And then they said, wow, we kept rates too high for too long there. Couldn't handle it. Let's bring the rates down. Then what happened? Inflation got out of control again in the early 70s. So when inflation got out of control again, what did they do? They raised rates even higher. Look how high they raised them. This was the 1970 high, and they went even higher in 1974. Then what happened? Well, they raised rates, and again, the economy couldn't handle it. People were just debt burdened and used to being lent money and having their house go up. So then they had to lower the rates again all of a sudden. The economy couldn't tolerate 12.5% interest rates. And then they did it again. Inflation got out of control again. They went to 18%, and then everything crashed, And we, I think, are in one of those cycles. I think we are right here. We're in that 1970 position where they just raised rates. We're going to have to lower them in the next 12 months or so, and they might lower them more than you think. And then if inflation gets out of control again, boom, they have to raise rates again. This is why the Fed doesn't want to lower rates yet, folks. Okay, again, here they lowered rates because the economy sucked. Inflation got ridiculously out of control. Then they had to raise rates even higher. The Fed doesn't want to do that ideally. And that's why they're not going to lower rates right now, because they do understand what I'm showing you. So over here now, you see a spike up in the rates over here. That's the recent rate hikes. If they drop them aggressively, like they did back here, inflation will probably get out of control again, right? The US national debt is higher. Everything's going to be out of whack and out of control. So this is where we're at right now. The Federal Reserve is trying to avoid dropping rates too soon and causing inflation to get out of control again. It's a very delicate balance. The entire economy globally and locally all hinges on this stuff. China's struggling, Europe's struggling, all these places are struggling, but yet we have to keep the rates high and let them struggle.
Yeah, and how often do they report on these inflation numbers?
So right now they're reporting every month on this, and they were always doing that even during the bull market, but you don't really pay attention. Inflation was low. We kind of didn't really care what the CPI was.
Yeah.
But now they're doing the same monthly reports and people are looking at it, focused on it like a hawk. because now we have an inflation problem, so people are paying attention during a weird time. So we do have another meeting coming up in May, and they're going to announce what the CPI inflation is. So I'll pull up the article here, and you'll see here that in May they're going to be reporting on May 15th what the CPI numbers are, and we're expecting that inflation is going to probably be higher again. I mean, it's been trending higher for 3 or 4 months, and you would expect that trend might continue. And depending on what they say here, will kind of influence what Jerome Powell ends up saying in June. Are we going to hike rates? Are we going to lower rates? When are you going to cut the damn rates? So if in May they say inflation has risen again more than we expected, then in June he's going to maybe say, I don't know if we're cutting rates at all this year. That might be the language he uses. And only a month ago, they promised 3 rate cuts. Now they might say, well, we'll try to do one, but I don't even know if we could do one. That might be the language he uses. And if that happens, that's not a good situation for the stock market.
Yeah. And we were talking earlier, like we're not too far off of like all-time highs on the stock market.
Yeah.
So all this kind of negative down talk, and because I was asking him earlier today, I'm like, yeah, this sounds like it could potentially go down based on what can be reported. Yet we're actually like we hit an all-time high like not too long ago in the stock market. So and you're going to talk about one thing that you shared in the course around divergence.
Yeah.
And how things like on this side, this looks great, but hey, look, under the surface here, there's some stuff that you might want to pay attention to. So that was a really good learning and reminder in the course that you shared. So that was good. So so you showed a little bit of stocks. What's the crypto markets doing?
Yeah, so they are interconnected, and although they don't follow each other exactly, during times of extreme turbulence, they do, right? So in 2022, when they did the rate hikes, when the stock market started falling, it dragged cryptos down with it, even though we were in a bull market for cryptos. It was over, right, all of a sudden. So it didn't matter if you loved cryptos. It didn't matter if you loved Rolex watches. They all dropped in value in 2022 and 2023 because the stock market went down and the economy went down. And at the end of the day, if the economy sucks, people are going to have to pull their money out of investments, including cryptos. So that's just the way it works. And so let's go share the screen again here. Let's go quickly, just look at the stock chart here. You'll see here again, we were predicting public, and this is part of the value of following us here. We predicted right over here back on the beginning of April, we predicted a drop coming, and now it's come. But the thing is, a lot of people are now getting excited because we're going up again, right? And we're getting close to the all-time high for the stock market again. But one thing I want to really point out to you guys is that there's something called divergence. And I was teaching about this during my stock course recently. People got a lot out of this one. Obviously, I'm not going to go into the same detail here, but I want to give you a summary. So at the bottom, you'll see our volume trending higher. You can see the volume getting taller and taller and taller at the same time that the market was going up. So the indicators like MACD and volume were trending higher at the same time the stock market was trending higher. That's normal. That's healthy. That's good. Okay. And we weren't calling for a pullback. We just kept saying to you, as long as the stock market keeps riding that uptrend and not breaking below our trend line, we are okay. And you'll see that more recently, we broke through that trend line, right? That big red candle now broke our trend. So what are we talking about here? Let's zoom in on the chart a little bit here. What we're seeing here now is, I posted this chart to my Facebook group, Invest Like Mike. You'll see here that now the stock market is trending up again here for the past 2 or 3 weeks, but the volume is trending down, right? There's less and less and less and less volume happening while the stock market's going up. And we don't have the MACD on here, but if you're familiar with the MACD has crossed over and is pointing down. This is called negative divergence, okay? So before, both of them were trending higher during that bull rally over here. Okay, the volume and everything was trending higher with the market because we expected rate cuts later this year. As soon as they said we might not really cut rates, well, then what happened? The market's going up and the volume's going down. People are saying, I don't want to put my money in here. What if they don't even cut the damn rates? And now we have what's called negative divergence. So when this happens, it doesn't mean we're going to fall right now, this moment, this day, but it means we are at risk of falling. And there's times like that where I'm going to show you another one here. This is from June of 2023, summer of 2023. You can see that the volume was trending down at the same time that the market was going up. That's the exact same situation we have right now. And what that means is within a few weeks or within a couple months, you're going to get a pullback, and we did. There's the pullback we got after. So I think we're in a moment like this right now, and I think that we are in a vulnerable position where we have negative divergence and we could have a correction, just like we did last summer. Okay, and I'm going to measure that. We ended up falling a total of 6%, which might not sound like much, but it was a pretty decent dip that we had there. Okay, and if we fast forward over here, we have this divergence happening, and maybe we'll end up falling to a double bottom or a slightly lower low. Like maybe this will just fall to a similar level again or a little lower and then rebound at some point later in the summer or midsummer. So, I can't guarantee you anything, but I'm showing you the setups here. It's the same setup we had when we had our last dip in the summer of last year. And, if we keep hearing this negativity here, they don't want to lower rates too soon and have inflation get out of control again. So you might ask, how does this affect cryptos? Pull up our Bitcoin chart. And what you'll see here is that Bitcoin has been in a sideways or a downtrend before April 1st, actually. It kind of peaked around the middle of March here, March 14th. You'll see that it kind of peaked right in this area over here. And you'll see some lines on my screen. I did a post recently. This is something I taught more explicitly in the training course. We're in the middle of an ABC correction, it looks like, where you end up having an ABC kind of a correction. And I've broken it down into waves on our screen here. In the last C wave here, this would be the C wave portion over here. We typically have 5 waves. And you can see that we had 1, 2, 3, 4, and we potentially are in the wave 5 to the downside where I have my dotted arrow here. So if the stock market starts rolling over, Bitcoin could fall, and the real support is over here, folks. Look at where I just drew those black lines. See how it was trapped sideways here for a while? That's the only meaningful support on our screen. After that was a straight shot to the upside, and there is no support there. That was just a straight rocket ride to the upside. So the real support, the last real support we had was over here. And if you look on the right side of your screen here, you'll see that, that's somewhere in the low 50s potentially, right? We could fall to 53K or a little less, right? If the market rolls over, that's where I'm sure we're heading, is probably somewhere into this area here. So that might sound a little scary, and you might be saying to yourself, we just had the Bitcoin halving. You guys were so bullish a month or two ago, and we were. But when the Federal Reserve starts speaking differently, we listen.
Yeah.
And, again, you're a football coach. You send your players out, you told them what the play is. And now you're noticing that the defense is changing all their positions around. And now your play isn't very good anymore. So you change your play. And that's where we're at right now.
Yeah. So you have to be humble enough to be able to pivot when you're given new information. And also, it's all about perspective. So just remember where we've come from on Bitcoin. Like, 10, 12 months ago, like we were way down here. Then we got way up here, like quick, super fast. So understand that people take profits, and it all depends on when you got in. Like, you might be feeling this a little bit more because it came down from the 73 or whatever it was to, and then Mikey's talking about potentially 50, potentially 45. the level of support that he's talking about, the strong support, is lower because there was no breathers on the way up. It was just big green candles all the way up. And then it kind of hovered around a bit. And then we had some crashes, then up, then some crashes, then up. So some of that feels a little bit more painful. So that's the Bitcoin chart. And the smaller, the mid cap, the altcoins, they get hammered that much more. But on the upswing, they go up that much more. So you really need to understand your level of risk tolerance, your time frame for investing. So you just really have to be mindful of that. So yeah.
Yeah, the other thing that I added in, like I always show this book here. This is Sun Tzu, The Art of War. It's a nice thin little book you can buy. It's an easy read. And a very famous warrior, Asian warrior. And, he was talked about in The Sopranos. He's been talked about in movies. He's been talked about all the time. And investing is a war, and it's a financial war. And, his famous quote is, every battle is won before it's ever fought. And what he means by that is, if you don't have the right game plan, even if you're winning at first, you'll lose eventually because you have the wrong game plan from the start if you're not prepared. So, if you got into cryptos assuming that they're only going to go up, or if you got into stocks assuming they're only going to go up and the rate hike certainly will come very soon, that's not the right mentality. You have to think that, well, maybe they'll come soon, but maybe they won't. And if they don't, I better change my game plan. I better have a plan B and a plan C and a way of changing my plan, right? If you're a warrior and you're charging towards the other side of the field to battle the warriors, if all of a sudden over the top of the hill come 1,000 horses and warriors with swords, and you didn't know they were behind that hill, once you see them come over the hill, you might want to retreat. And that's kind of what the Fed's doing right now, right? We thought they were going to lower rates for sure. Now maybe they won't. So you have to change your game plan. So it's tricky times right now, and they say, sell when others are greedy, buy when they're fearful. Everyone was being greedy a month or two ago. I mean, we all thought that the market would just keep going up because that was the trend that was in play. So even though Bitcoin already doubled or tripled in value in the past 6, 7 months, we wanted it to go even higher.
Yeah. And we talked about positive catalysts that could continue to move this higher. Well, like Mikey said, sometimes things come out that trump previous catalysts.
Yeah.
So even though you have maybe 5 catalysts that are like, yeah, should do well, one of them can bring down stocks, and stocks can bring down crypto, can bring down Bitcoin, and can bring down altcoins that much more. So you just got to be aware of that. And a good investor needs to be able to pivot when you're given different information.
Yeah, and the difficult part is that most people, you're living your life. Maybe you're watching your sports at night, you're going to work all day, you're taking care of the kids. You're not focused on all this stuff, right? But we are, and certain people are. And so we're going to be better at gauging this stuff. When I warned that the market was about to dip a month ago, I wasn't just guessing. I had a very specific reason, and it happened. Now I'm saying to you, it might come down again. And I've just listed the reasons. I've showed you the divergence on the charts. The average person doesn't have that skill set or the time or the ability maybe even to gain that skill set. I mean, who the hell cares about the Federal Reserve and interest rates? It's not exciting to most people, right? But we're studying it. And I remember one time I was watching Conor McGregor in the UFC fight Nate Diaz, and Conor McGregor was like the greatest fighter at that time, and they'd never fought before. And I was like, Conor McGregor is gonna beat this guy up so hard, And then you're watching the fight, and by the third round, Conor McGregor is breathing heavily. He can't even control his breath. And if you can't control your breath in a fight, you're probably going to lose. You're going to gas out. So when the third round came, I said, I think Nate Diaz is going to win now. I changed my opinion because Conor McGregor can't even breathe properly. And Nate Diaz looks like he's fine. He's a long distance runner. He does long distance marathons. Like he does Ironmans. And Conor McGregor can't even breathe. And Nate Diaz beat Conor McGregor. So I changed my opinion in the middle of the fight. That's kind of how we're treating the stock market and the crypto rally right now. Are we bullish long term on the stock market? Maybe I was still bullish on Conor McGregor's career, but I thought he was going to lose that fight. I think that cryptos and stocks are going to lose this short term fight, even if long term they go higher. That's kind of the way I'm looking at this.
Right. And short term can be a month, it can be 3 months. But the long-term bullish trend that I think that we're still in can be a year, can be a year and a half, based on a lot of the catalysts that we mentioned in previous videos. So you had some data on the ETF outflows. So in previous videos, we talked a lot about the ETF and how much money it's brought into cryptos and Bitcoin and increased demand and less supply. Layer that on with the Bitcoin halving, which reduced the supply that much more. So there was record numbers coming in over the last bunch of months. And I think BlackRock had this like super long streak of inflows. So since our last video, a lot of that has changed. A lot of the buying has slowed down from BlackRock. That streak has ended. And there have actually been a steady streak of outflow days. So obviously, with less people buying into ETFs, that means less Bitcoin are getting purchased, which means less demand, which means prices have come down some. And that's in line with what we're seeing in like the S&P, like that comes down, which impacts a lot of things. And the things that Mikey was talking about, inflation numbers, it all kind of ties into each other. And you did a great job in the course of, I mean, you started with like macro and like, yeah, we're going to start here because that impacts all of it. I can show you all the technical analysis. I can draw all the fancy lines on the chart, and it's all nice. But if something happens, if Jerome Powell says things in a certain tone, and there's an art to understanding not only the data, but the real important thing is how he describes what is written down and the tone he uses and the words he uses. So it's there's a lot of analysis that can be done around that. So
yeah, and I mean it's difficult to wrap your head around that if you're not really, really good at this and diligent at it, and that's why it's a benefit to people for people to watch us. And we thought that cryptos might continue the rally a month ago, but when we heard the narrative change, we changed. And if you've been following my Invest Like Mike group on Facebook, I've been very consistently warning people that we would go lower for the past 3 or 4 weeks. And we did that in our last video. And, I think it's good to be able to just admit that what we thought was going to happen isn't going to happen now. Not that we were wrong necessarily, but the world changed and we are adapting to it, right? We couldn't have predicted that Jerome Powell would say something different, but we can listen. And when we hear it, we change our strategy. So let's go check out the outflows here that Mike was talking about. So Mike was talking about these very consistently. If you watched our videos, you'll remember he was very, very consistently going over this stuff. Let me get my drawing tool out here. We'll do it in red. So you'll remember that during our videos in January and February and March, we were pointing out how the Bitcoin flows, right? So inflows or outflows here, that we had a lot of inflows. So you see the blue line going higher, right? You see everything going higher. Money was pouring in to these markets, right? You'll see the blue line represents the total inflows and outflows there. And you'll see the blue line was trending up very consistently all the way until, where is this? Around the middle of March or so, kind of around here, somewhere around mid to late March. If you look at the bottom of your screen, we were flowing in and you could see the blue line just zigzagging higher. When did that change? Well, we showed you that around the beginning of April was when Jerome Powell started saying negative things. Well, look what happened on the inflow outflow chart where I did the red circle at the beginning of April. Now it's in a downtrend. You can see now that it's trending down. If you really trace out this blue line, it's zigzagging lower. And,
but keep in mind, there's still inflow, right? It's not zero. It's not negative on all days. When it's all add up, it's still positive. Like there's still demand. The demand just wasn't nearly as high as it had been over the last couple of months.
Yeah, so I mean, you could see that the amount of money is less. And instead of us constantly and consistently putting more and more money into the markets, now it's slowing down, and people are saying maybe I keep some extra cash on the sidelines here during the turbulent times. And when did it happen? When the Federal Reserve spoke and said we might not cut rates anytime soon. So you can see how this all ties together and how we're using different metrics and different charts here with the fund flows to track it. I'm using divergence on the chart and all these different things to track it. So when you use all of these different things and you combine them together, you can say to yourself, right now might be a tricky time to hang on to all of your positions. So, let's kind of see how this all works out. But right now, we're seeing that the market is flowing towards the downside. And I want to point something else out. I'm going to just draw my top support, or sorry, my top resistance. And then I'm going to label this area here. And the reason why I'm doing that is when we first dropped, we were trying to just stay in this range here, right? Ideally, Bitcoin wanted to just go sideways and then go up later, okay? And when we did the ETF dip, that's kind of what we did. If you look here, we kind of just went sideways here in a range, and then we went higher, right? That's what people want to have right now, okay? But right now, if you look really carefully, I don't know. I mean, now it looks like it's trying to fall lower. Like maybe we're going to go into a new down range like that, zigzagging to the downside and going towards the low 50s because our support is all the way over here. Okay. So I personally think that instead of us being in this sideways range, I really think that we're going to end up converting into zigzagging in more of a downside range here, especially if next week the CPI report comes out hot and the inflation is rising again. That means that people are going to say, wow, if inflation's hot again in May, we know what Jerome Powell is going to say in June when he decides on the next rate hike or no rate hike. He's probably not going to hike rates, but he's probably going to be like, hey, we might not even cut rates this year. Look at the May inflation report. So this coming week is very important, and it will help us predict what Jerome Powell will end up saying in June.
Yeah. So there's question marks, and the market doesn't like uncertainty. So we don't know which way it's going to go right now. So it's very important to understand your trading horizon, what type of trader you are. Are you in and out often? Are you a day trader? Are you a swing trader that, you might be in and out like maybe every month or every couple months? Or you're a long-term holder. So when Mikey says this might go down to 50, that sounds crazy, but do you think maybe in 9 months it might be higher? Maybe a year and a half? Are you patient enough for it to come back? Or do you get out because there's a strong probability that it might get to there? Or it breaks out and then it goes up. This is where it gets tough, but understanding your time frame for investing is very helpful because even like we had some tacos today. I'm like, dude, you're saying these things. This is kind of my time frame for investing. I bought into these things. I've been dollar cost averaging in. I'm up over the last year because I was able to dollar cost average in way back then. So I can weather more of that downturn. I don't like to see my profits go, but in my opinion, I personally think that we're going to be higher maybe 6-ish months from now and potentially a lot higher, given the information that we have right now. That can all change whenever the CPI comes out, and maybe the month after that, it's weak as well. And as Mikey was showing on the charts, when all those things line up, then there's the potential for it to go down. So I'm like confused, like we're in this limbo of like all these things that say it should do this, but then Mikey shows macro stuff that trumps all of it. So now we're seeing the impact of how that will play out over the next little bit.
Yeah, it's kind of one of those things like I pulled this out in past videos. This is a $100 trillion bill here from Zimbabwe. And this is the collector's piece now. And if you were in Zimbabwe, they caused hyperinflation. And literally, look at all those zeros. It's $100 trillion bill here, okay? And this is a valuable collectible now. But it's funny, when this was real currency, it was worth nothing. And now as a collectible, it's worth a lot more. So what's my point in showing that, right? My point is we do expect prices to go up and the dollar to lose value. We do expect all those things. And if you have a balloon filled with helium and you let go of it, you expect it to float higher, right? But what if I grab that string on the balloon and I pull it down again? Well, it's not going to float higher until I let go again. Okay. That's what they're doing with interest rates. When they hiked interest rates that much, it's like I see the balloon going up, I grab the string and I pull it down. Them starting the lower rates is when they let go of the balloon again. We're waiting for them to let go of the damn balloon so that we can continue a long-term trend of money devaluation. But they're still hanging on to the string of the balloon right now. And they're saying, by the way, we're going to hang on to the string a little longer right now. So I like to use analogies to simplify things because that is literally the situation we are in. So, rather than getting confused, try to follow people like us and others that can simplify a complex subject and make it into simply holding the strings of a balloon, right? The balloon is inflation. And when they lower the rates, we get inflation and dollar devaluation again. And if you think about it that way, you might be confused right now, but I bet in 6 months, if they announce they're going to lower rates 5 times over the next 2 years or something, you're going to know what to do then, right? They're going to let go of the strings and the inflation balloon will go higher.
So listen to these things over and over again, because I always get him to slow down and get him to repeat certain things. And I'm like, this is how I kind of understand things. And I close, and then he'll bring up another analogy, and I'm like, that's helpful, right? So these all kind of play into each other. Higher interest rates, unemployment, and money printing. And when what these things happen, certain things happen with the stock market and cryptos. So it's very important to understand when some of these things change, what impact it has on the things that you're invested in. And should you be in the market? Should you be on the sidelines? Should you just hold? These are all things you kind of have to play around with. So, yeah, you do a really good job. Like the analogies really help a lot.
The thing is, too, you have to listen to a variety of people and figure out over a long period of time who has a good track record on their opinions and are they willing to change their opinions when they need to? Are they stubbornly saying the same thing even when they're wrong? And that's why I've used Ray Dalio and other people. And you'll hear me talk on these videos, and I give the analogy of the balloon and holding onto the strings. I don't have any papers here that I'm reading off of. It's just me thinking about it on the spot because I actually understand these subjects very well and I can just come up with these on the fly. A lot of people would need a script for this stuff because they don't actually really understand it that well. So be careful who you're listening to. Make sure you follow someone that has a good track record. I was promoting staying in cash in early 2022, mid 2022, even late 2022. And it wasn't until early 2023 onwards that I said, let's start buying stuff.
Yeah.
And we've had a pretty darn good track record, even with the cryptos. We promoted it very heavily from October onwards. And we've been honestly telling people that we thought it would drop for the past month or month and a half. We've been telling people, I think cryptos will drop.
And this guy, man, he's crazy with his recall ability. Like you should see him, like this course that he did, and the way he just like references back of like, oh, back in like 1995, the S&P did this, and he's looking at a green candle. He's like, and this happened on that date, and when that happened, you can see what happened on the chart. So yeah, it's pretty wild. So one more thing, and you don't have to be all in or all out. There's in betweens as well. Even at lunch today, I'm like, I don't know, I kind of just hold like it's better to be in the market. And I'm like, maybe it's just not either or. Maybe it's not either all in or all out. Maybe you're not all cash, because I own a mix of low, medium, and higher risk and degen plays. So the ones that get hit the hardest are the higher risk ones. But they also go up like crazy. I'm like, well, dude, I don't want to miss this. But what's showing up on the charts is we're in this downward channel, and the things that are lining up indicate that could continue. So maybe I sell off a couple of these degen or high risk plays and have those sitting in cash, and then a good trader needs to practice patience. I know you've been sitting in cash for a while, whereas like a year or two ago, we would have been more tempted to go just no, I just want it in there.
Yeah.
Right.
Yeah.
And like now it's, well, maybe I chunk into it or I chunk out of it. So just understand it doesn't have to be all in or all in. Maybe there's a middle ground where you're getting out of like 30% of them. And maybe the 30% of the high risk that could potentially go down a good amount more in relation to the Bitcoin and the S&P. But now you've got a chunk of cash. So if there is that crazy event that goes down, you have some dry powder on the sidelines where you can pick the stuff up at maybe a 40% discount. So that's a lesson learned for me, and I'm still working on that one. I don't have big chunks of cash just sitting there, and I need to practice more of let's take some profits on the way up on some of these and letting it sit in cash of the 10 or 20% or whatever in cash. So I'm working on that. It's always a hard one for me because I was in real estate as well, and it's like it's tough just sitting in cash and knowing that the things are inflating and your cash just doesn't go as far. But in instances like this, sometimes it's wise to ease up on a little bit of your positions.
Yeah, and the other day here we were watching one of my favorite movies together. He had never seen it before. It's called Rounders with Matt Damon and Edward Norton. It's a great movie. It's a poker movie. It's an amazing, amazing movie. And we were watching it, and I mean, if you're a poker player, I've done poker. I've been successful at it before, and sometimes you get a really, really, really good hand, and you know that it's almost unbeatable, and you're going to put more of your chips into the middle of the table when you have a strong hand. But other times you have a weak hand and someone else is betting aggressively against you. And sometimes you got to fold that hand. Sometimes you got to regroup and get some new cards, so to speak. And, during the past couple months has been weakness. But prior to that, we had 6 months or 7 months of extreme strength. Stock market, crypto market went straight up. That's like me playing poker and getting two kings and two aces and two queens all the time. I'm just getting these great hands and I'm all in, I'm all in, I'm all in, and I'm winning and I'm all in. And then all of a sudden, someone deals me a 5 and a 2. Well, if you play poker, a 5 and a 2 sucks. That's a terrible start to your hand. And the Federal Reserve just dealt us a 5 and a 2 when we were used to having pocket aces. So, I mean, you have to be a good poker player, so to speak, when you're investing, and you have to realize what's in my hand here. Should I be betting all of my money as if I have pocket aces, or do I have a shitty hand right now and maybe I should take it easy? I think right now the whole economy and the market has a shitty poker hand right now, and we're waiting for pocket kings or pocket aces. That's the way I'm looking at it. So
yeah. How about you bring up a couple charts of maybe some of the cryptos, maybe some of the altcoins, and just show them how they fall a little bit more in relation to Bitcoin. So we talked about Bitcoin, how it's gone on this massive run, then it's had a pretty healthy pullback. But altcoins, Solana, and a bunch of other ones, like they get hit a little bit harder. And you would have made more money on the altcoins on the way up, but you just got to be mindful that on the way down, that stuff hurts as well.
So if you look here, Bitcoin has fallen about 23% from its peak back in around April 1st there or whatever it was in March, April, and we've fallen about 23%. Now, that's pretty meaningful, right? That's pretty meaningful. But wait until you see how much some of these altcoins have fallen. They've fallen a lot more. So even if you go look at Solana, which is still a big, big coin, but it's still an altcoin, they fell from the peak here around 210. They fell to about 120, 43%, right? Bitcoin fell 23%, Solana fell 43%. It fell more, the same way that Spotify fell more than Microsoft when stocks dropped, right? That's just the way it goes. Let's look at another one of my top picks, Render, right? It's one of my favorites. And if you go look at it here, we were as high as about $13.50. Let's get the ruler out. And it fell as much as 52%, even more than Solana, right? 53%. So you can see that the smaller the coin, the more risky the coin, the more it can fall when you're in a down market.
Yeah, so don't click off this yet. And we've mentioned this multiple times on here. It's all about perspective. yes, if you're zooming in on the last month and a half, red everywhere. But zoom out, like look back to February. In February, it looks like it was around $4. It shot from $4 to almost $14 in
Yeah,
a couple months.
October was under $2. Look at that, $1.67 in October. So even the current price of $10, it was $1.67 in October.
Yeah,
Just
that's
remember that.
10x. So understand that smart investors are taking money along the way. They see things, but they're also locking in profits. They're putting some cash aside, and they're buying when certain things are hitting certain levels on the charts.
So let's look up another one that I like, Nearcoin, and then Mike can suggest a couple as well. Okay, Nearcoin, one of my top picks. You'll notice already I have chart analysis on the screen where I'm tracking an inverse head and shoulders pattern. And even though I see an inverse head and shoulders pattern, if Bitcoin starts dropping right now, guess what's going to happen to Nearcoin? It's gonna go lower, and maybe the upside down head and shoulders pattern won't break out to the upside, right? So this is what comes with experience and skill and patience, which I have, and people taking my training course were very happy for me to really go in a detailed fashion and show them how this stuff works. So Nearcoin, so I'm going to do two things here. So how much did Nearcoin go up from October? Okay. Nearcoin was like $1 in October. Okay. So it went up. I mean, my goodness, it went up 750%. Okay. So
In 159 days.
that's amazing, right? And now it's dropped. Let me get my ruler up here. Now it's dropped, geez, like it's dropped 52%, similar to render, right? And in a matter of a couple months, it's fallen a lot, right?
And look how that bounced off the support from previous back at the end of December.
Yeah, if you look at it
So I can
here,
see these things easier now.
you see how it actually took support on that line that
And if
Mike's
you had
showing.
cash on the side right here, well, I'm pointing, you guys can't see it, but yeah, the arrow there, you see that big wick down? If you had cash on the sidelines and you put in a buy limit order right there, look how much it shot up from there. It looks like it was like it shot down to like 450 and then shot right back up to like $6, like in next to no time.
Yeah, he's referring to this red candle right here.
Yeah.
You'll see the low point was $4.30, and then it shot up to $5.30 all at once there, and people shot us back up to the upside there. But again, the point being, we started at $1 in October, and we're still at $7 here. So remember where you came from. He's pointing out how this peak here acted as support for us right here. Okay, we actually picked up support there from that previous point of support and resistance. So
And then what's the all-time high in this? Zoom out a little bit more. Oh, that is
yeah, that is the all-time high.
Yeah,
Yeah.
so relatively newer one.
So this is one I'm bullish on. What's another one you want to look up?
IMX is always a good one of mine. So this is not a super high risk one, but this is in the gaming space. This is one of my top picks on the gaming side. So I would consider this one a medium risk in my portfolio. Everyone has their different definitions of low, medium, and high risk. You need to determine what that is in your own portfolio.
So you'll see here that recently I did analysis probably a week ago or something like that, and I was showing how we were trapped in a pennant pattern. You could see it bouncing around in here in this triangular pattern. And I was predicting that maybe we can have a breakout. If you zoom in, you'll see that it's actually trying to break out right now. Okay. But I will warn you, if Bitcoin rolls over, this will roll over with it. Okay. So although these cryptos we're showing you, Render and Near and IMX, are very good ones that people like and they want to shoot them higher in the next year or two. In the next week or two, they could still go down. And let's see how much.
Wait. So zoom out a little further this. Keep going, see what the high is of this. Yeah. So when you zoom out a little further on this, during the last bull market, this shows you the potential of what it could get to. So if you believe that this one will be higher than the next one, it could potentially get to that and more.
Yeah, it was almost $6 before back in the 2021 cycle there. And now we're sitting at $2.30 still. So if the bull market continues in the next 12 to 24 months, this could be a $5 to $10 crypto pretty easily.
And just because it got there doesn't mean it has to get there again. Obviously, the company still needs to be good and doing things, which they are. So they're more likely to continue towards the higher end.
Yeah, so I mean, it's always about perspective there, and that's one that we're bullish on. But right now,
Yeah.
it might still drop.
So another favorite of Mikey's is Whiff.
Oh,
His favorite dog with hat. So these are memes, meme coins. So again, this can be gambling. Like, so allocate your portfolio accordingly. Don't invest 50% into gambling where it could do this and can do that. But it's okay to allocate a portion of your portfolio to some of these if your risk tolerance allows for that.
So just from like late February onwards, after the ETF approvals, this stupid dog with hats coin has gone up over 1,600%.
In 38 days.
Like crazy, right? Crazy rally of 1,600% over here. And now it's dropped in value by probably 40-50%. I'm going to guess I'll measure it in a second. So, it can go up fast and it comes down fast. Let's see how much it dropped.
Look how it's bouncing off this support and resistance here.
Yeah, so this one dropped about 60%. You'll remember that near and render were more 50. So the more risky the coin, the more it gets dumped off.
Bring up the RSI here. So like look at how it's bounced. Look how strong this support and resistance is right along here. And it bounced right off of that. RSI actually didn't get
No, not very
I would have expected it to.
Yeah, so I feel like we'll have to see, but this will keep falling quite a bit more if cryptos roll over again. This one's gonna fall pretty hard because right now, not that I want to trash your coin here, but there's the support we're hanging on to right now. Okay, we're trying to hang on to that same support we had back here. Well, imagine if cryptos all keep falling. Where's your next support? Like down here? Like I don't even see any other support. So I'm not predicting it's going to go to 10 cents necessarily, but if you really look on your chart, the only support we have is right here. We're currently trying to stay above that support zone. And if Bitcoin crashes to 50 or 52, this will go to whatever. I don't know.
Kind of see a potential head and shoulders too, eh?
Yeah.
Head.
Yeah.
Shoulder.
That's a good call right there too. So again, I'm not. I hate this coin. It's stupid. They have one called Tucker Carlson. So it's not Tucker Carlson. It's Tucker Carlson. Like they have all these stupid things they're making up. There's no.
He's bitter because he's not in.
Yeah. There's no value in them. Okay. Like I don't like.
1,600%.
I don't like Pokemon, but they're a very popular thing, and everyone buys their kids Pokemon. I see the value in Pokemon, even though I hate them. But this is just stupid. And so like this could fall a lot. And Mike's pointing out that we're actually forming a head and shoulders. And right now we could potentially just be forming a right shoulder, a really wide one. And if Bitcoin breaks down, what happens after a head and shoulders? It falls a meaningful amount more.
So a head and shoulders is a topping pattern.
Yeah.
And there's no guarantees that will happen. But when that pattern lines up with other things and catalysts and the overall market, I think what he's shown here has the likelihood to continue that down.
If we get Bitcoin and stuff falling down, you'll see I just drew a red line here, and you'll notice that there's a little section here where we kind of hung out for a little while. I could see this going towards $1.50 or lower, and it's $3 right now. I bet this can go down another 40 or 50% pretty easily if the entire market goes on a dip soon. So I'm not promising you the dog with hats is going to go to $1.50, but because it's not a prominent coin and people don't really care about it, if Bitcoin starts falling meaningfully, this is going to fall a lot more, at least to this level here. That's the only support on your whole screen, and then it's like 30 cents. So be careful with these ones, as Mike said. It is more like
small amount of your portfolio on these things. Like they're fun to get in, like you see the memes, and we talk about this shit that's like I don't fully understand why this moves, and but it has the potential to move. So if you're in on a couple of these, and not that you're going to catch the bottom and sell at the top, but in that instance, if you happen to, and you put $10,000, if you put $10 into it, it literally turned into like $16,000. So who knows? Maybe you can kind of get into a couple. So we just wanted to show you the correlation between here's what's happening in macro, here's what happens in stocks and the S&P, here's what Bitcoin's doing. You know, a couple things have changed over the last little bit since we've come on here and chatted. And then also the altcoins. You have the potential to make a lot of money, but be very mindful of how you're allocating your portfolio. You know, depending where you're at in life, depending how much money you have invested, obviously don't invest more than you can afford to lose. And the things we share on here is not financial advice. We're just on here sharing our opinion based on all of the content that we're bringing in. But super, super important to know the type of trader. And are you a trader? Are you an investor? What is your time frame? Are you in and out every day? Do you want to look at this stuff every minute? Do you have 5 minute candles on your chart, or are you more of a daily or a weekly, which is usually what I'm in and around. I'm not in and out often. You know, I do my best to dollar cost average in, and the lesson learned from the previous market was to have a plan, trade your plan, and actually put the orders in and get the emotions out. Because, and we're going to share some more videos around this, we're eventually going to get into a euphoria state where things go parabolic, and your emotions will play with you, and then things will turn, and you're like, well, we're just in a breather, and it'll go back up. You got to lock in. You got to lock in your profits. You got to have some cash. And again, that's another lesson learned for me, because I see these things on charts now. I'm like, bro, I wish I had a little bit of cash. I wish I cashed out a little bit on dog with hat. I was up 200% at one point. I'm still up 90-ish%, which is awesome. But it would be cool to see what he shared in the training. I can see these things on the charts. I'm lining up these things, RSI, all these topping patterns, and these are indicators that you might want to alter some of your positions slightly. And again, it doesn't have to be all in, all out. Maybe you're taking out 20% of your gains. You're letting the next thing ride. If it rides up, and we were just having a chat with another guy the other day. He got into a trade. Things went really well, and it's oh yeah, I'm up this much, and it's great to be up that much, and everyone can make money when we're in the euphoria state. But things can turn, and things can turn quick, and your 100% gain can turn into a 20% gain, which can easily turn into a 25% loss. So just really understand that.
Yeah, and like I said, right now we're just in a moment where I think we are in limbo with the potential of still going lower, especially if the CPI report next week comes out negative. So stay vigilant. Do what you want. I think having some cash right now is good. I'm basically all cash. He's a little bit of cash, might do more cash. Warren Buffett's got some cash. There's people that have, even with the ETFs now, rather than putting as much in as they normally did, they're keeping some cash back just in case. If we have a dip, then they will inflow it again, and they will buy it at a cheaper price. So
it's a good spot to practice patience. Yeah.
Okay, so I think we're going to wrap it up here, folks. We're going to do another video as well that we might release midweek. We're going to have more consistent videos coming now, and we've just done a whole bunch of real estate investing and traveling, and we've been in Cabo San Lucas and back here, and we're going to go to Tulum, and we've been doing some traveling, and we're going to share some of the alternative investment that we've been doing, and how to kind of diversify your investments.
Yeah. So, and this channel is so much more than just investing in stocks and real estate. All of the macro stuff that he's talking about impacts other types of investments as well, around real estate and investing. You invest here, or you can invest there, and what's it look like if you're buying businesses? And so there's some exciting things coming up. So appreciate you guys. Make sure that you subscribe, share with your friends. And if you have any questions with anything, we get questions all the time, just toss them in the comments. We'll do our best to answer them on on videos. Maybe we'll even just do separate videos for if we get common questions. Yeah, and that's it for today. Thanks for listening, everyone.
Take care.
Take it easy. Bye-bye.